Hello everybody, welcome to the TraderMerlin Show. It is your Monday, and a pretty exciting Monday at that, not just because the markets were up yet again and looking rather good to the upside, but because of our guest today. I'll do a little bit of market recap at the end of today's show, but I want to spend as much time as I can with our guest today because we got a friendly competition going over here, guys. As you know, we're going to have Don Fron on our show talking about the Don Fron Show, and also talking about markets and traders' mindset. So Don, happy to have you with us today. How you doing?
Good, man. How you doing?
Fantastic. It's a pleasure having you on. It's been a long time. I've been following your stuff for quite some time, obviously, with where I used to work for. So good to have you with us.
Nice. Glad to be here.
I want to do a couple things to start. Number one, every time I bring someone on the program first time, I ask them 3 basic questions so our viewers get a sense as to who you are, what's your background, a little bit, without spending the whole entire show going over that. And that is basically going to be talking about 3 questions. Number 1 is how long you've been trading. Number 2 is what do you trade? And number 3 would be what's your trading style?
Okay. How long? 2013 I started trading. Very minimal commissions, $20 back then. It wasn't the free world we have now.
Mm-hmm.
Full time getting serious, 2015. What was it? What was the second question?
What instruments do you trade?
All of them.
Yeah.
Options, futures, forex. Different strategy for each one. Forex a little bit slower, larger time frames. And then mostly stocks and mixing in stocks and options, and then. When the right opportunity comes with this volatility, I've been taking advantage of the futures contracts as well. Just major indexes, though.
Yeah, absolutely. I mean, it's the beauty of switching around. And how long? I mean, like if you said your trading style would be shorter term, longer term, intermediate.
Swing trade, couple days, few days, mostly.
Okay.
And then, as with anything else, if it picks up, I'll day trade or take a larger position. But majority of it's a couple 3-day swing trade.
Perfect. All right, so there you guys got it. Trades just about everything. Started off really getting serious in 2015, but was doing it before that. How did you? I'm just kind of curious as to how you got into trading or investing. I mean, we all have different paths on how we got here. I know you do real estate as well, so we could probably do a real estate show at some point. But what was it that drew you to this industry specifically? Trading.
Money, to be honest. Which I'll go ahead and say it. In fact, I was actually paper trading. When I was in the 8th grade, begged my parents for the Wall Street Journal. Because all I knew was stocks and real estate. You can ask my kindergarten teacher what I wanted to do when I grew up, and it was sell buildings. Because I was just kind of, I don't want to give the sob story, but we weren't rich. So I knew I needed money to fix things. I watched it almost tear my family apart. And I knew stocks was where the money was at. I had the same dream everyone else had. And what really drove it in 8th grade, I picked out a few out of the Wall Street Journal, and I forget what else I was using. There was one other thing, but it was a 5-cent ticker. I picked the companies because they either sounded cool, or this one was they made armor for Hummers. And unfortunately, that I was in 8th grade when 9/11 happened. So I watched that go from 5 cents to $32. And my dad said, just imagine if you had $500 in that. And I was like, man, that could be the ticket. That's where I first saw the potential.
Mm-hmm.
And it wasn't until I was able to, again, we kind of dug our way out, our family did, and I finally had money to start trading, and then that's when I dove into it. But started at an early age. I could recognize the potential. Something was in there. Funny,
my story is at 9 years old, I was at my dad's house in a mountain in the middle of nowhere, and he had an S&P stock guide, and I was like, "What's this book?" So I started read through it, and that piqued my interest. But I really didn't get started, professionally thinking about it till I was in college, and that was back in 1996. So it's been a wild ride, been fun. It wasn't something I thought I would be doing now, but here you and I both are, kind of in knee deep in it, huh?
Yeah, it's fun some days.
Some days. Well, let's talk about why trading works. Trading works because people have differences of opinions. And as you guys can see by the graphic I put together for today's show, I'm going to try to be all dramatic here. TraderMerlin versus the Don Fron Show. It's there. And obviously, guys, we're not giving any sort of hostility here. But as for anybody watching the show, you know that if I take a step back and look at the big picture, my gut tells me this is a house of cards. I feel like it's going to come crashing down, and I feel like I should probably be ready for the bearish side of things. And I'm going to let Don share his perspective because it might be something that many of you watching right now are lockstep with and think so as well. So tell me your perspective on this market, and what should your trader mindset be?
trader mindset.
Yeah, I mean, you got an opinion.
Yeah, I do, and I'd be careful because I don't like hyping anybody into things. But I really think tech is just beginning. Now, again, if this crashes tomorrow, I'll be the first one to change that mind. But as of right now, like I was kind of sharing this off air, I think we're about to ditch the BlackBerry and go to the iPhone, where everybody, like if you know the story behind Sprint, they put all their chips in the BlackBerry, the Nextel, the walkie-talkie. They thought that was it. No one was going to take to the iPhone. I think that was just an old way of thinking. And we saw with the Rona and everything come out, companies really adapt to technology. We fell on the back of technology, really got us through this. So I think that just kind of showed everyone what the next step is. And there's people that are already on board and they're early or they're the first ones in line. I think everyone's going to pile in behind them. I think that's why you've seen the very few tech stocks really lead the way. There are definitely things failing. Look at the auto industry, right? Everyone down 35%, Tesla making money, going for it. And there's stories like that across the board. So, and I was actually focused on, if I watched NASDAQ, the Qs, I've really been in tech enjoying this ride up, which has definitely been, it's been up there. I'll even say that for me. It's been pretty bullish to where, I don't want to say tiptoe it, but I tell my followers, hey, if there's more green candles than red, buy it. You know, the trend is usually a friend until it's not. The important part is manage your risk so that one day if you finally do take that loss, we'll switch gears in the then. But in the meantime, let's take advantage of it. Don't be paralyzed by it.
Yeah, and and again, guys, this is just a matter of perspective, and there's no argument that Don at this point is totally right, that tech is clearly the lead dog. Let me show you a chart here. Unfortunately, Don, you don't get to see this one, but...
I came prepared. I got a screen up.
Okay, cool. What I'm showing the viewers out here is just since 2019, to kind of put it in perspective, let's just say separation. There's that old phrase, as one of these kids is not like the other. If you look at this chart right here, I'm showing you the major sectors of the S&P. Your consumer staples and energy and utilities, healthcare, etc. And you notice there's two lines that clearly are just miles above the other. And if you look at the S&P, that's this black line in the center here, it's up about 30% since January 1st of 2019. So I'm giving it a little extra time than just starting at the beginning of 2020. You got about a year and a half. Well, that's a 30% move, which obviously is great. If you think 8% average per year, we're well above average. But look at the two lines above it. You have this blue line is XLK, which Don was talking about, technology really leading the way here. And that's up 83.98%. That is incredible. And of course, if we break that open further into the technology sector, 95% gains for semiconductors. Now, this is where I think it's great to talk about a trader's mindset, because if I look at this chart, I'm looking at it saying, okay, one of these is way outside the norm of the others, and that is technology. It is clearly being the piece that's bringing up the equity markets, and my school of thought, or at least my trader mindset, tells me that it's going to be reversion to the mean because there's too many other things below the S&P 500, meaning a bulk of the companies are lagging, but you've got really one industry that's just ripping to the upside. And you mentioned earlier that you thought this was going to be the piece that brings it up, and this is where we have just difference of opinions, and that's great. You're thinking that the rest of the market is actually going to catch up with the tech sector, right?
Yeah, I think once we get past things, and there's going to be a few that fail. I think a few need to fail. I don't think everyone needs to be propped up, but the ones that can adapt and get to a new mindset, I think those will start to surge. The ones that can really take on a new market. I think those would be the ones that play catch up. I think a majority will follow suit with that.
All right. Yeah, I agree with you. I think a lot of these companies are going to go away the dodo, and it's going to create the term everybody hates, which is that new normal. This earnings season, I haven't followed them as much as I normally do, as closely. Certainly, we had the FANG stocks report, and for the most part, other than Google, everything looking great there. But some of these retailers, especially the retailers, or some of these companies, especially the retailers, reporting the next couple weeks, to me are like the big wild card, because if you're looking at an economy going to continue to grow, especially at this really kind of vaulted rate, something else is going to have to replace that, right? If retail sales companies go away, so let's say you've got your Barnes and Nobles, they're done. You've got Pacific Sunwear, you've got your J.C. Penney's and these types of stores, Kohl's, Ross stores. Amazon right now is eating their lunch, and the charts absolutely prove it, right? The charts show that. But how do you, where do you spot the transition? Because if these other companies are going to really step up their game and compete with your Facebook, Microsoft, Amazon, I don't know. For me, I can't see how they're going to push it up.
I think they got to get rid of the old heads, the old way of thinking. Think of how many jobs out there you go to work and you sit at your desk all day, and those guys, they can't stay home. I'm kind of going through this feud right now, so don't follow me on Facebook just yet if you, if you get offended. But the kids going back to school, half and half. Like, you can only get sick on odd number of weeks. Like, whose boss wants to hear that? And I think companies like that need to. It's going to be this awkward transition, and I think that's what's going to make things difficult. And I think that's another reason, as cars went from not gas to electric, but as they started to add computers in there was that 90s era where the computer was just kind of like borderline just in the way. But now the computer tells you everything what's wrong with the car. You almost don't even, like, you go to a mechanic, they can tell you instantly right away. So right now I think we're in that transition phase where we're going to, separate the boys from the men who can adapt. Like you said, the new normal. Yeah. They need to be able to do this to keep up. And I don't see why not. Everyone has this mindset you have to go to work. You have to drive somewhere to do something on a computer and sit at your desk all day. And how much more productive would you be if your workforce wasn't 30 minutes away from your building and you had a talent pool from around the world at this point with just access to the internet?
Yeah, it's the classic paradigm shift, right? We're looking at a transition. I think this whole COVID thing really did further exacerbate the push to that change. I think we were headed there slowly, right, with working from home and remote stuff, but maybe this is going to be a permanent solution from now on. I still am skeptical, thinking these markets are going to continue to rally up, but that's just the beauty of being a trader. Now, you're someone who's decisively bullish. We've got a few of my viewers as well who are very bullish on the markets. Are you a permabull, or are you one of those guys who'll say, because in your trading years from 2013, it's been nothing but a bull market. So are you one of those guys who's going to say, hey, I know at some point we're going to go on a downtrend for 2, 3, 4, 5 years, or is it just always bullish?
No, I'll trade it when it happens. If you ask my mentor group, I don't do the sky is falling. I don't really pump the fear out there. But if the charts say it, the chart's going to say it. At the end of the day, we're going to see the same candles, green and red. So when the red shows up, we'll switch gears. I did a stream or a video talking about just this. As long as there's more green candles than red, the trend is up. I'll eventually take that one loss when the correction does happen. I'll take that one small loss. That's what managing risk is about. And then I'll switch gears. Okay, here it is. This is not a pullback. This is a correction, probably a little bit deeper. Let's go ahead and ride the gravy train to the downside. I did just that in February.
Yeah. And that's the key. As to have any sort of longevity in this, you have to be that trader who's going to be flexible and say, okay, my bullish hat has to come off. My viewers know I've been very very bearish. And I've actually done well on small pullbacks in the market to the south side. It's just this prolonged move has been, it's not been great for me, but it's all right. We'll make do. What sort of things are you looking at out there? Are there any specific companies or markets or sectors that you've been focusing on? I know you're a tech guy, so I'm assuming you got some FANG stocks in there.
Yeah, and anyone that's in the chat right now that's been following me, you guys know I am 100%. I have been trading Amazon and Tesla lately. And today I kind of had to go on a shopping spree because, Tesla first made its first push up. Now it's kind of been stagnant. I'm finally getting back out of that. Amazon finally had its final, real momentum push up. So, I was taking full-blown advantage of that momentum while it was there, which is also another thing I like to talk about. Strike while the iron's hot, but then recognize that's not going to last forever. Right. Almost like what you just asked me. Yeah, like once that momentum dies down, that's that. There's 7,000 tickers you can pick from. You don't need to be married to just one, but if it's moving the way you like it, stay in it. But it's definitely been Amazon and Tesla for me lately.
All right, I'll bring up charts over here so we can look at some of those. Clearly, you're bullish, and Amazon has been on one of the most amazing tears anybody's probably ever seen. And given the fact we're in the middle of this whole COVID crisis, what Amazon has done has been just unbelievable. You guys can see it here. I've got the daily chart going all the way back into November of 2019. We bottomed out in March on Amazon specifically. You're looking at a low price of $16.26. It recently hit, so what was the high? $13.34. You're over 100% gain in 6 months. Pretty unbelievable, especially for a company that's as mature and as large as Amazon. Watching a penny stock move up 100% is no big deal. But somebody with the market cap and valuations of Amazon, we're now close to, I think it's 1.6 trillion, 1.5, maybe dropped to 1.4 today, given how much it's moving. So I'm sure that rally up has been great for you. What are you thinking now? I mean, obviously we came into some supply zones a couple days ago. I mean, it looks to me like it's just chopping back and forth. So how would you be trading that?
Right now, I've definitely dialed it back. I mean, if you were to pull up Amazon and Tesla at the same time, look what happened at the end of June to now. And what I actually started switching to just dialing it back in general. I've definitely locked in some because I trail everything. If it's going to go to the moon, I'm going with it. Did trails, it knocks out, and I buy the dip, and it's getting choppy. But it's starting to lose the excitement. I'm watching out for, right now, a bigger term base that maybe we might break out of. You can see Amazon, like you said, chopping back and forth. Like I have a zone at like 2950-ish to 3200, and you can see we're just spiking up and down, back and forth. So I like buying at the bottom. I'm starting to see we're making some higher lows, so I'm curious about the 30-50 area right now. And then ultimately waiting for that break of the 3250. Long term, I still think this will be, I hate throwing out numbers, but 4,000 by the end of the year, like I don't see why not.
Yeah.
So, but while this happens, what I've kind of suggested doing it when things go sideways like this, vertical spreads are a good thing, something theta neutral if anyone's in options contracts, because that sideways action kills you. Day trade, locking it in while it's there. I don't like waking up to gaps down, so definitely I'm laying into it intraday. So while I might swing it for 4 days, I've been in Amazon most of this whole time, but on the way down, getting out, getting back in. If it's pushing up, I'm adding on, but I'm closing down just that section I added on at the end of the day.
You do me a favor, share your screen, because I want people. I love how people see what other people are looking at. When it comes to charting, I would almost call myself a nudist, right? Like my parents named me Merlin. You can tell they're hippies. I like things about as clean as you can get. Yours are pretty clean, but you do throw a lot of lines on. Yeah, there we go. I got your screen full screen. Walk her through. You can do some analysis for us, or just kind of let our viewers know what you're looking at, because we're all doing our own art on our own charts.
Mm-hmm. Well, one thing your followers have to understand is I break things down for a lot of people. So my main, like you start to see me now, if you guys have been following me, I started making these a little bit brighter. Like these are the ones like, hey, I'm really focusing on these. I definitely don't like having just a bunch of charts. I will start deleting stuff. I don't like it being that cluttered. But these purple zones, like intraday stuff, like don't be alarmed if there's a red candle there, or if you're bullish, or there's a reversal. That's like a turbulent area. But again, buying down here, waiting for the breakout up here. I am still in it. It didn't really give us much today. So I decided to stay in it right here. I was looking for that to break. If we got a clean break of this, I was going to be out. And I love breaking things down on the 4-hour charts.
Yeah, me too. And I love how you got those two. I'm colorblind, so I'm going to say those are yellow, your top and bottom zones there. You're pretty much right dead center of that zone. So are you obviously trading the underlier is going to be pretty expensive at $3,100 a share. Are you predominantly looking at options and spreads on this?
Yeah.
Okay.
Yeah, right now I'm in a 3,600 call that I just grabbed. I didn't ride most of this wave down. Grabbed that at the end, and that's what I'm still in. I think it's actually down a little bit today because I didn't catch the direct bottom.
No worries. And you've been studying this for a long time. I know that you've gone through probably several schools. I know you at one point you went to Online Trading Academy, but you used some of their stuff and some of other pieces. What would you say from your style, your trading style, is kind of I don't know. I was going for what makes your style unique. You know what I mean? Like we all take pieces from different parties and make our own. I'm trying to get an idea of your style. I know you're a zones, levels kind of guy, right? You are a trend and zone?
Yeah. Like I don't think it's sharing anymore, but you saw on Amazon, we kind of had that trend going up. We got a little excited. You saw all the green candles. I think we're going to go choppy, and then we kind of cool back off, and then maybe continue that trend up. I do watch for stuff like that. But yeah, if I had to put a word for it, and kind of what I hope people take away from me is behavioral psychology.
Right.
It's still humans buying all this, and their emotions playing into it, which is why most people lose. They don't have a grip on it. They don't recognize their own emotions, and that can be quite the roller coaster. If you aren't privy to that. And
it's all psychology. I mean, at the end of the day, every candle on that screen and everything we look at is simply the result of buyers and sellers. It may be buyers with more money and buyers with less money, but more power. But ultimately, it's what we are, right, as behavioral scientists and understanding what the herd's doing. So,
Yeah, and like the OT, I think they do like traditional supply and demand. I veer off a little bit. I'm a very off the radar kind of person. I like to get in where there's that clash or that balance of buyers and sellers. That's what creates these zones and that structure for me, because I know, hey, there was buyers there last time. If they're here, I'm here with them. But I'm obviously going to break out if they're not there anymore. So I'm not trying to grab the very bottoms. I'm not trying to grab the very tops. I don't try to predict anything, but if the structure's there, I'll trade it. Never without any risk management. Big fan of OCO order brackets.
Nice.
Every trade, not a single one doesn't have an entry, a stop loss, and a round to take profit.
I almost want to have you repeat that because, I always tell people I'm happy to analyze anything for you. Even if I don't trade it, I can still give you some analysis. But a lot of people will be like, hey, Merlin, I bought Nikola at $38, and what do you think? It's like, well, first off, I wouldn't have bought it at $38. But number two is, where was your stop loss? Where was your price target? Because if you just told me you bought it, I don't know much about you. I can't tell you, how big a risk you're taking, which is the ultimate factor here in success. I can't tell you the probability of being stopped out or hitting your targets or where you think it's going. So I love the fact you're talking everything has those three. And I'm guilty of it because, to me, target is a secondary factor. Making money is great. Most important is not losing it. So for everything that I do, it has a stop loss in the system, and the reason for that is I want to make sure I don't lose more than I thought, because as you and I probably can testify to the rest of the group here, when you're in a position that starts going against you, there's a very easy human psychology behavior piece that says, I'll let it go a little bit further. Next thing you knew, that one trade just blew up your account.
I literally just went on that rant last night. There was another trader in another course I took, which it always confuses people, like, why do I take so many courses? And you never know what you don't know. Right. I'm a big fan if anybody can teach me anything. I've just been doing it a while. But it bugs me to no end when someone gets in something, they even have a stop loss, and then they say, well, I'm going to wait.
Yeah.
Like, whoa, hold on a second. Why did your plan just change out of nowhere? Because you're letting a red candle affect your judgment, your emotions now.
Yeah, and unfortunately, the emotions side take a big impact on our trading. Eb wants to know, what time frame do you use for that call on Amazon? Are you like a shorter term, or what time frame are you looking at?
I want to say November. Let me double check.
The live market read. All right, let's see. While he looks up that one, I'm going to bring up another piece here. Let's go take a peek at. While you look it up, you mentioned that you're a price and a candle kind of guy. I noticed on some of your materials that you do a lot with pattern formations. Talking about flags and pennants. I mean, how critical is that to you? Does that help you in your analysis, like candlestick patterns and things like that?
My favorite is like the base rally. I like it when it's a clear base. It's November 20th, by the way, on my 3600 call. My least favorite, I like a pennant. It shows you higher lows, lower highs. If you're a bull or a bear, you're going to ride that line until that breaks, and then now your pattern broke. You're either in it or you're out. The rally and base gives you that clear structure. I actually can't stand bull and bear flags because it raises the question, bear flag or reversal, because it's a counter trend to make that flag. I mean, you're literally saying, I'm going to go long because it's making lower lows and lower highs. Not the biggest fan of that. But as far as patterns go, I poke the bear. I make fun of them sometimes. But that's the retail world, right? And I'm more of a strength in numbers. And if I'm in this zone and all of a sudden I see a trend line that's at play, there's a bull flag or some head and shoulders might pan out. I'm just thinking there's that many more retailers on my side. I like to buy with the banks, the whole buy low, sell high thing. I try to do the best I can at that. But yeah, as far as the patterns go, they're easy. They're an easy sell. So I'm not the biggest fan of them. Okay. But they get the retail side on your side. And again, it's the strength of numbers because there's more buyers, it goes up. More sellers, it goes down.
Yeah, for me, I would put myself in the camp of more a fan of patterns, and the predominant reason goes back to what you talked about earlier, which was herd psychology. And those formations, whether it's a triangle, a pennant, whatever, is basically giving you a defined picture of group mentality over time, right? A candle will tell you group mentality or thoughts in one candle, whereas if I'm looking at a flag or a ascending triangle or something like that, that's over an extended period of time. And I agree with you. I think that if you look at a bullish flag pattern, way too subjective, right? It's a longer flag now, and it's starting to drift down to it. I don't know. I don't look at certain ones like that, but I will say that if I had to pick chart patterns, I'm a huge fan of double tops, double bottoms. I'm a huge fan of ascending and descending triangles, and those are probably my 4 favorite things to look for in the landscape.
Oh, you're killing me.
Well, you don't like them?
The wedges?
No, not a wedge.
Okay.
Like a full-on ascending triangle, which basically an ascending triangle has a flat top, so the price on the top line doesn't change. And basically, it's just defining that ceiling that's hit over and over and over again, and the bottoms are making higher lows.
Yeah, okay. I was thinking wedge there because those.
No.
You never know when those are going to break out.
No.
But what you're talking about, what I tell my group, I try to make it as simple as I can, like a hammer on glass. You got your flat plane, and you got that constant beating. And more often than not, the flat line is the one that breaks. But you're watching definitely both of those. And when one breaks, there's your pattern. It's either for or against you, and you're either making money, put your stop in the green, or you're tagging out.
Yep, I agree. Hammer on glass, I like that. And for me, it's a jackhammer on concrete. And my analogy is that if you try to chip away at concrete with a little hammer, it's going to take you forever. But if you get a jackhammer, first hit's not going to break it. Second one might not, but the more that happens, the more likely it's going to break through, and we find new levels from there. So yeah, as long as it's got that defined line, I'm a bigger fan of it. All right, let's shift our focus and look at Tesla here, because I know you trade. I think you're probably in Tesla right now. I've got the chart up here. Amazon was interesting because it felt like Amazon was really traversing sideways and just showing some consolidation after an unbelievable run up. Tesla, to me, looks a little bit different. It actually looks a bit weaker than Amazon. You guys can see it here. You've had that just monstrous rally on Tesla, spiking back in July on the 13th at a high of 1790. Was it 1794? Just ridiculous move up. It's almost 100% in a month. That's incredible. But it's showing weakness. But you're still bullish on it, right?
Yeah, overall.
Overall, yeah. 10-year plan?
If there's one company I'm ever going to break the rules on, I'm definitely a Tesla fan. I just like what it's doing world-wise. But that's definitely fundamentals. As far as charts go, a chart is a chart. It's going to ultimately give you the biggest picture of what everybody else is thinking.
Mm-hmm.
But yeah, so it had that monstrous move up. And actually, if you look at, July 10th? July 10th, we take off. We go from the 1400 level, and we really shoot up to the 17. We got the wick up there, but we shoot up to the 1750.
Yep.
And we've done nothing but actually stay inside that little quick leg up. And the characteristics there's Tesla and Netflix. They have this cult following that trade what I've seen very differently from every other ticker. And with Tesla, this is a common pattern for Tesla to push up, go sideways, push up some more. But what I've said many times on my channel is these pullbacks are dangerous because Tesla doesn't know how to walk or crawl. It just runs and runs and runs, and that pullback just gets carried away, and you can see some nice moves to the downside, especially if you're short.
I'm a fan of unfilled gaps. You notice on this Tesla, in that just crazy run up in early July, you have a real nice gap that started. I'll give it about 1120. There was another one that also started. Looks to be about 1221. If we get down below that 1400 mark, which sounds to me like it's kind of your line in the sand since it was the origin of that last huge move up, do you now pull out the short guns and shoot for those gaps? Or are you waiting to buy it because you're more of a long-term approach?
I'll actually share my screen because. Okay. This one,
because my drawing's not working. Is that what you're telling me?
No, I want to explain this one because it might sound crazy. This is how I'm going to approach it.
Sure. No, we love to see different perspectives. It's awesome.
So I have this highlighted in white right here. You guys should see it, right?
Yep.
That's just highlighting that leg up. Kind of watching this area right here. I think we're bullish if we break above that 1600 mark. And bearish if we break below this 1400, which we can definitely see kind of that weakness, the lower highs. Not the strongest look, but we're definitely holding it right here.
Mm-hmm.
I'm definitely a buyer at the 1200 mark, and probably an aggressive buyer. And this is what I've talked about before. Roku used to do this all the time. It'll have this trend up, right? A nice little solid trend, gets a little carried away, and then it comes back down and carries on. Like the big bank gets in, rides the profit, big bank sells. Now the little guys are back in and carrying it up. So I kind of want to see, if we do get that sell-off, I think 1,200 might be a really good buy.
Yeah.
But I'm still going to roll the dice. I still see a strong zone here at that 1,300 mark. If it not even for a quick bounce, enough that I feel confident that if we hit that 1300, we'll at least bounce. I'll get my stop in the green, enough to take that risk off the table. But yeah, it might just bounce out of this zone, make that lower high right here. At that point, I don't really like it. I think I like the first time it retests this 1300 zone. I don't know if I like bouncing off this a couple times.
Yeah, I agree with you. And I mean, it's nice the way you have those kind of steps mapped out on that Tesla. I mean, I agree. I think if you get down below that 1479 mark, that you're probably going to see a quick drop down to that 13. And if we do get down to 13, I for one am not going to be a buyer. I'm not that big of a fan, but I would probably be interested if we did get to that 1200 mark on Tesla. I just think I think from a trend perspective, it got a little bit ahead of itself. Not that it's not worth $1,800 a share. It's just maybe not right now. I mean, let us let some of the fundamentals settle in a little bit here and let the market price in fair value. But 1,200 would probably be a good buy point at this one. So
I think it would be. I think we're on the clock as far as that one goes. Mm-hmm. We do have Battery Day coming out, and there's a lot of speculation. But in the UK, it's already a utility. So like where I'm at, we're paying KCP&L, where you could just start paying Tesla for utility. Their new vehicles have what's called vehicle to grid. So you actually plug your car in. It's smart and charges during the day when power is cheap, because power fluctuates just like a stock. And then at night, your car's still plugged in, but you're powering the grid, pulling power from your car, powering your home.
Yeah.
I think we need to hit that soon.
Yeah, I mean, and I tell you what, if they can manage to dominate that market, then yeah, sky's the limit on this one. Who knows? It seems crazy when you look at some of the fundamental valuations and the amount of debt they have. But if you're building something that big for down the road, then obviously money well spent. People were saying the same thing about Amazon when their fundamentals were showing so much money being put into Amazon Web Services in the cloud. People were like, what is wrong with Amazon? How stupid is this? They're not even making any money on it. And now it's becoming their bread and butter. So I think it's a similar situation here with Tesla. Not that they'll maybe go as parabolic as Amazon, but if you get into an industry and you put enough money into it, R&D, and you dominate it, then you got a monopoly. And
I bet it blows Amazon out of the water.
Long term, really?
Yeah, easily.
Oh, I might take that. I might take that bet, buddy. Here's why: Tesla's batteries and cars. Amazon's everything. I bet you Bezos is no slouch. He'll buy up whoever whoever Tesla's competition is in the battery space and go at it as well. I don't think that they'll be eating Amazon's lunch anytime soon.
Tesla doesn't even have any competition. Look at Volkswagen's CEO. He said, let's take all cars electric, and they fired him. Like, you had one chance. No, Tesla doesn't have any competition. They're going to blow Amazon out.
Yeah, all right. We'll see. I'll remember this. I'll try to make notes. Remember this conversation in 10, 15 years if I'm still on the right side of the dirt after this COVID virus doesn't kill me.
What was that bottle you bet everybody on?
Blanton's.
Whiskey.
Blanton's.
Whatever it is. We'll put that on it.
Done. Book it.
And we'll give it 2 years.
Yeah. Well, we're not going to bet on the Super Bowl because, the Niners gave you that Super Bowl, by the way.
The 49ers?
We literally handed it to you. Why did we stop running the ball in the fourth quarter? It makes no... We're like, you know what? We don't want to win. We'll just start passing the ball again. If we ran the ball, game over, you lost.
Yeah, well, that's the thing is you got to hold the ball. Like the last game you guys had was Joe Montana. Other than that...
Yeah, I'm not a Jimmy G fan, but we look good. Damn it. Well, hopefully we'll see you guys again in the playoffs. All right, so if people want to get in touch with you, I actually had your name on the screen there. You guys, he's Don Fron from the Don Fron Show. I also had his webpage up. I think I had it up there. Oh, I may have moved that one off, but I will bring it up for you guys. You can go to DonFronShow.com. He's got a website up there. Of course, most of your stuff is probably done on your YouTube channel, right?
Mm-hmm.
Yeah. So there's your Don Fron webpage there if you guys want to check it out. Of course, he does all kinds of release about market information and data and market updates and different things about trading and investing, kind of like I do here on my show as well. So you can check that one out. Just go to YouTube and go to Don Fron Show. All right, Don. Well, anything else if we want to impart something on our viewers? Any parting quotes or anything?
Man, the next candle is going to be green or red. Just take the trade.
There we go.
Don't let it paralyze you.
It's like saying... What's tomorrow going to be like? A day.
Yeah, exactly. Just get in there and do it.
Get in there and do it. All right, man. Well, thank you so much for coming on today. I do appreciate it. Hopefully we'll have you back on again in the future. Maybe we'll make a regular thing of this.
Of course. I'm down.
All right, man. Thank you so much. Take care.
Have a good one.
You too. Bye. Guys, that was Don Fron from the Don Fron Show. For those of you who might be new to this channel, do me a favor, click that subscribe button so you get updates. I do the show every single day, Monday through Friday at 2 p.m. live, plus some other videos I upload. You can also, if you liked it, give me a little thumbs up there. I thought it'd be interesting to bring Don on simply because he's done a bunch of different education pieces, and he's taken Online Trading Academy's classes, but doesn't use their content in the Online Trading Academy way. He's taken pieces from there and pieces from somewhere else, and I think that's a great lesson. And I've emphasized that one as well, is there are a lot of different perspectives on how to approach these markets. I, for one, am more in the Online Trading Academy camp. That's why I am still there. But there are pieces that you can get there and use other components from different sources and combine those and maybe make something works better for you. The ultimate point is you have to experiment and trade a strategy or plan for a while and see how you work with it. Is that strategy working for you? Are you a counter trend trader? Are you a breakout trader? Are you trading patterns? Are you trading purely supply and demand? Are you using odds enhancers? I mean, there's this long list of things that you need to be looking for to, I guess, put the odds in your favor. So I want to thank Don for coming on and sharing some information with us regarding not just his style and experiences, but also Amazon and Tesla. Tesla, I'm actually bearish on, at least to 1200. I think that just the pattern looked a bit weak. Amazon, I can never be bearish on. I will be bullish on Amazon forever until the company disappears. I will die before Amazon disappears. So I'm certainly in Amazon's bullish camp. But I like the fact that Don is overall net bullish on the markets, and I am net bearish. And it's tough because at this point, anybody hearing those statements would point right at Don and say, well, Don's right, he's the better trader. That's not a true statement. You could say he's right about the market direction right now, but I, in the interim, am making trades accordingly to capitalize on whatever market moves are out there. And I think that's the key thing here, is whether your opinion is bullish or bearish is almost irrelevant. I mean, you want to just do what the market is giving you. If the market gives you bullish opportunities, then I'll be bullish. If the market's giving me bearish opportunities, then I will be bearish. That's just the way the markets work. All right. Can we please talk about... Coach says, can I talk more about the GDP freefall? How much time I got? GDP freefall, for those that didn't see that was a YouTube video I posted. If you go to TraderMerlin's YouTube channel and look at the playlist, you'll see one I did on Saturday called the GDP freefall. And I'll bring up, let me see if I can bring up those charts for you. Bear with me, I got to look through some folders over here because I'm doing this live. It was an interesting one. I wanted to do something that was a little bit different and was just, I guess, outstanding. And if you look at the numbers on the GDP, it was absolutely outstanding. So I think I have I'll just bring up this. I think this is what I got. Bear with me 2 seconds, guys. I'm almost got it up here. All right, there we go. So the GDP free fall was this one here. And it was interesting because if we look back into 2000, you'll notice that we just barely tiptoed down below this horizontal line. That is the zero up here at the top is your GDP. Well, if we go forward on this bad boy, you can see back in 2009 we went down below that GDP number. And remember what everybody was saying when the bottom hit in 2009. It felt like the apocalypse. It was crazy how bad people were making out this market to be. And that was only down here. I want to say that was about 6%, maybe 6.5%. Well, if you look at what happened on the most recent numbers, there it is. It was down 9.5% for the quarter, which annualized makes it a negative 32.9%. To me, that is just crazy free. I call it the GDP free fall, and that's because in Q2 we had a lot of shutdowns. Now, it's interesting because we're not out of the woods yet. I don't expect the next GDP to be a contraction of 9.5%, guys. Absolutely not. I think it's going to be way better than that, but it'll still be a contraction because most of the economy is still struggling to get their feet back on the ground. But I just thought that this chart was just so jaw-dropping. It's incredible thinking how bad it was in 2009 and people thought it was the end of the world, and we are now well past that. So there you go. So that's it, Coach. If you want, I can go more detail, but you guys got to let me know more a little bit later on that one, and I'll be happy to dive deeper into it. Joseph says, love the voiceover with Tilly's video. Well, I'm glad you caught that. For the viewers that don't know, it was actually pretty funny. Tilly mentioned the wrong date that she was going to be on the show, and I actually had to go in and do a little a voiceover for it. So I'm glad you enjoyed that one. I'm glad you caught it. Actualizing GDP would require a 52-week quarantine. No, the tough part here is it's an estimate. So they'll take one quarter and they'll estimate what's going to be for the year. So it's never going to be negative 32% unless we stay right where we are at for a year. that would be a 32.9% decline in GDP. What'll happen is there'll probably be, my guess is the next quarter will be a bump up, so we'll probably go from negative 9.5 to, let's say, negative 5, right? So it'll be a big jump up. Now they'll say, oh, it's an annualized of about negative 20%. So it'll look much better. Unless we go into another major shutdown, I just don't see GDP getting worse than a 9.5% quarterly contraction. That was pretty big drop in quarterly GDP, but of course, it was quarantine, shutdowns, lockdowns, and we're easing things right now, but it's still going to be a contraction number. Of course, we know that is now officially recession, 2 consecutive quarters of negative GDP, and there you have it. Lock, signed, sealed, delivered, recession. All right, what else do I have for you guys today? I had some economic announcements, so I'm going to go and bring those ones up. Let's see, I have economic and earnings announcements, so let me share that with you guys here. Here's your economic calendar for tomorrow. I'm highlighting in red here the U.S. stuff. You guys can see we have factory orders and IBD tip economic optimism. IBD tip economic optimism numbers aren't really that important to me. Factory orders are obviously the more expansion in that area, and if we were really coming out of quarantine, coming out of this whole COVID thing in shining colors, I would expect that factory orders number to be huge. Right now, the expectations are showing a contraction from 8% to 5.1%. Still a gain, but nowhere near what it was before. So I'm a little skeptical on this factory orders number tomorrow. To me, it definitely helps reflect the impact of COVID on the overall economy. And other than that, there's not major stuff. I mean, New Zealand has unemployment rate, but that's not that big of a deal. Sorry for my Kiwi folks down there. Looking at your earnings counter for tomorrow, there are some major names this week. Tomorrow is not one of those weeks. You have Walt Disney, BP, Activision, Blizzard are some of the major names, and Sony reporting earnings tomorrow. Those will be your main stories. Not a lot, nothing really that significant was reported out there today in today's market. So nothing that noteworthy. All right, guys, got any last minute questions for me? Throw them at me. I will dive in. I didn't think I saw any other questions that I may have missed on here. I don't think Don drives a Tesla. Believe he's a Chevy Corvette kind of guy. All right, well, if I don't see any last minute questions, I'm going to wrap this one up early and hopefully get myself out some sunshine, go for a hike on Back Bay with the kid. Tomorrow I'll have Tilly Allison on the program. We are going to talk about S&P levels. If you watched her, Tilly Allison's market outlook for last week, or for this week, which came out on Sunday, she was highlighting some distribution zones that were, at the time, a good distance away. And all of a sudden, we're getting very close to those distribution zones. So you might want to check out Tilly's market outlook, which you can find on my YouTube channel under TraderMerlin. That will do it for me. If you guys have questions, comments, feedback, if you like the show, give me a thumbs up. You can always go out to TraderMerlin.com, send your comments and questions, or send anything there. I'm happy to go into details and market analysis, whatever you want. Just send me stuff there, or you can always go to the YouTube videos and put your comments down below the YouTube video. Now, as a parting gift, Adam says, crude oil still has not given a direction. Crude oil has gone like flatline. If you were somebody who was a crude oil trader, you got to be just hating this. You've had a couple small blips, but right now it's just dead in the water. And it's just marvelous when you look at this chart. For 2 months, we've pretty much gone sideways. And look at the volatility. We went in January from a high on crude oil of $72.70 a barrel to a low of $6.50. Oh, they're actually modifying this one. It's not saying 723. It was actually 650 was the dead low on the 21st, April 21st. That right there is a $70 swing. That's incredible. And then all of a sudden we rallied from $6.50 to $40, and now we've been stuck at $40 for 2 months. It's just so bizarre to see that massive swing and then all of a sudden sideways nothingness happening. Kingsley says, did you get back? And by the way, if you're looking at crude oil, you just wait. I would do what Don was talking about, which is just put lines above, below. So there you go. And I would say if it breaks out of this range right here, which is going to be 38, call it 38.75 to 42.50. If it stays within there, don't just stay out of it. If it breaks out of it, now you got to trade on. I personally do think it will break to the upside, and we'll see that gap fill, and this will end up here probably at that $48 mark. Now, Sheena is right. I am not back in silver. I did not buy back into silver. I'm gonna wait. I think it's gonna have a much bigger correction, but I will be waiting for that one. Silver still holding very strong at 22.75 for SLV, and then you guys can see GLD here at 18.85. Gold just looking incredible. I mean, gold looks phenomenal. I thought we'd have a little more hesitation here at this 2,000 mark. We have not gotten a good follow through above it. That's for sure. Still kind of just hesitating at 2,000. I do think you'll see it sell off a little bit. Do I think gold and oil have some kind of connection? No, not really. No. I mean, it's obviously dollar related. So if you have the dollar dropping, which is $DXY, and the dollar is dropping, that helps fuel gold and crude oil prices the upside, which is interesting because gold has had a nice rally because of it, and crude oil has not. If we do start to see this dollar rally, which I expect it to have some rally, I mean, obviously it's been in just a major sell-off and it fell into demand, I actually believe that you would see the crude oil sell off a little bit and gold sell off a little bit. Oil is looking rather weird to me. It just seems to be stuck on its own thing, like this weird equilibrium point. I do think that you are going to see the gold relationship to the dollar more inversely related. So if we get this dollar to bounce, as I think it's going to do, we talked about that a couple days ago, that means that gold is probably going to sell off, and also silver. Let's see. We close right back around 40 bucks. Yeah, I know. Stuck in that sideways range. Let's see. All right, perfect. Cool, everybody. Well, that will do it for me for today. I hope you guys enjoyed this show today with Don Fron. If you want to check out his shows, Don Fron Show on YouTube, you can go to donfronshow.com as well. He's got a bunch of market education stuff there, so I hope you guys enjoyed that. If you did, give me a thumbs up. Hit the subscribe button if you are new to the show. Until then, happy trading, everybody. I will see you tomorrow with Tilly Allison, and I'm going to try to go into a whole bunch of different charts. So what I'd love from you guys, if you have a specific market or segment or stock you want to look at, send it in at TraderMerlin.com or post it down below in a YouTube video chat for today's video, and I will get to it on tomorrow's show. Happy trading, everybody. I will see you tomorrow.